Hey, welcome to the Closing Beat, everybody. Happy Monday. How's it going? Hope you're having a good day here so far. Sorry, we're a couple seconds late. Getting things fired up on a Monday. We got a little distracted. I'll post something on Instagram a little bit later, let you know why we got just a little distracted here in the studio today. All good, but we'll work through it. Hey, this is the Closing Beat. We call it just a quick financial show that we do. Cover the stock markets, the good, the bad, and the ugly. I'll try to just give you what happened, right? We'll save questions for the end. If you have anything, you can ask questions on our YouTube channel. We're also live on that YouTube channel there, so you can ask those questions and we'll help you out. But we'll go through the stock market today. We're playing a game called Guess the Dow. We're doing it through the summer. We'll probably just extend it. It seems to be going well. You guys like to play it. It's called Guess the Dow. Like I said, in last week's winner, Caitlin, her $100 is on the way to her. This week, we're doing a class for our customers. If you don't know, we're financial advisors here. We're doing things differently. We work with all investors of all sizes, but we want to teach every one of them along the way instead of just saying, hey, you don't have enough money, we're not going to work with you. We're going to just help teach, grow little by little, and help everybody sort of make the best out of their net worth, be as efficient as possible. And so we do classes every Thursday. Last week's class was on the financial planning software that we use. And I think even though we're supposed to talk about some debt stuff this week, we might include that into the class, but also do the sort of a follow-up on our financial planning software, because a lot of people have been turned on to it and want to start using it a little bit more. I see you guys in there. I see all the little things you guys do when you're making adjustments and stuff. So we're probably going to expand on that a little bit. If you want to see the events, you can go to our website under events. You can see all the classes that we do. Hey, our class earlier today at 1 o'clock, every day we do a video that goes live on YouTube. We did one about a new customer that transferred an IRA to us, and maybe we're going to start investing aggressively. We used the planning software and sort of broke it down to show how this customer, who is scared of the markets a little bit here, doesn't have to invest aggressively. So we're able to sort of cater a custom portfolio just to them if you want to see some of the things that we do. Or maybe if you fit in that boat. Our customer in this case was 41 years old, and she saw the comments, by the way. So we modeled some different things today to sort of help her maybe focus on that debt instead of investing so much to begin with, because she's a little bit worried anyways. Anyways, let's talk about the stock markets here. We got the Dow lower by 391, S&P 35, and the NASDAQ lost 96 by the end of the day. Deja vu, right? So last Monday, big down day. This Monday, it's very much a big down day. Not as bad as last Monday, but still a big down day. What's the deal with Mondays, man? That's kind of crazy. Hey, anyways, throughout the day, you saw the stock market, especially in the morning, before we got to lunchtime, you saw this sort of effort to try and buy that dip. You saw people willing to do it, a little hint of the bulls in there, but it was a really light volume day for the bulls, right? Just no real grip on the market for them. And so the markets really just bled off throughout the rest of the day. No real attempt at the end of the day to rally either. So not good in the short term, right? You get the feeling that there could be some more gyrations back and forth within this area. I'm going to pop over here real quick and see if we can pull up the charts. Hey, they worked. So you get the real suspicion here that this is going to be our area. We've got a wide range to deal with. We're probably going to see some days where it's very exciting and some days where it's kind of scary. And that's just because of the nature of where we're at. The market, it's essentially like, my best example would be if you took a bouncy ball, right, a fairly sizable bouncy ball, and you threw it up in the air and it bounced the first time, you could guess within a little area where it's likely to come back and bounce again, right? You'd probably be able to figure that out. But since you threw it up so high, it bounced, it doesn't quite go up as far. When it lands again, it doesn't quite go up as far, so it bounces faster, right? When it hits the ground again, it bounces faster. Only now, the more times it bounces, the more chances are that it can go all over the place. And so that's kind of where we're at with the market. We threw a ball against the ground, it shot up, and then as it came back down, now it's like, okay, is it going to hit a little pebble and move to the left? Is it going to hit a crack in the cement and go this way? It's a little bit sort of a guesswork here in the short term. Traders would say here, we need more information. You got to give us something. We need fundamental data, we need economic data, we need geopolitical data, we need technical data, something for them to make the next decision there. They just don't have it yet. All we have is a clearly defined support area, and now at least somewhat of an obvious of a resistance area, which we talked about last week quite perfectly, I might add. So with really this sort of in-between moment here, people go, okay, what's going on? Anything good? No? We're talking about trade again? Oh, no, that's not good news. What's going on in Hong Kong? That's not good, and it seems as though this is a chance for the U.S. to work with China and sort of maybe make amends there with the trade thing and help them out with what's going on there. And President Trump's like, that's China's problem. You guys got to get your people straight. And so they sort of left them high and dry. You got Argentina, the president of Argentina, who's very pro-business. You saw Mercado Libre today. If you happen to look at that stock, oops, I typed it in there wrong. You see this stock, the Argentina company, it was the biggest loser in the NASDAQ, down 10%, largely because the current pro-business president in Argentina, boy, it's not looking good for him. And so a lot of people wonder, are we going to undo what just allowed Mercado Libre, the Amazon of Argentina, to really grow like they have been? So you got that. You got other things out today. Analysts here, well, not analysts, but you got a note from Goldman Sachs saying, we're really concerned about this fourth quarter growth due to the trade war, meaning this earnings season was just sort of okay, right? We'll cover that in a second. But you got these guys, Goldman Sachs, saying we're really worried about overall growth for these companies in the fourth quarter because of this lingering sort of trade issue there. They think it's going to hurt the next quarter's growth, the fourth quarter end result of overall growth there. And so because of that, you got more reasons for people to go, well, I don't have a good reason to buy. I guess I'll just sort of sell. You got short-term traders going, yay, we picked off the bottom there. The resistance overhead here was rather obvious. We walked you through it each day there. So the short-term traders saying, I have no good reason to do anything either. And next thing you do, you go look at bonds. You go look at this 10-year here. It's about to make new highs again, which means the 10-year bond is about to yield a new low, right? So as prices move higher, yields move lower, and you go, well, that's not really good. It's not horrible for the stock market. We actually studied that, but it's not horrible for the stock market, but it's certainly not good. It lets you know that people are moving into, they're willing to accept increasingly lower rates of return to go have safety. So bonds move back to highs today, or notes move back to highs, and then bonds, if you look out to the 30-year, almost hit new highs there. The 2 to 10-year spread, I don't have a way to illustrate that I remember on these charts here, but the 2 to 10-year spread squeezed within 6 basis points of each other today. You can see it on the scroller above as the bonds go by there. There they go. And you can kind of see those kind of tightening in there. Has a lot of people thinking, okay, that's your next sort of inversion, and it's also not good for the Fed. You had Morgan Stanley come out today and say we basically are going under zero in terms of rates, which is not good. Look at the other countries where that's happening. Not currently all that exciting. All right, so if we go through the individual sectors here today, just a brief follow-up on what happened last week. You got energy. Energy still remains one of the weaker areas. It was the biggest week-over-week mover. It's also the weakest in terms of the amount that it fell out of all the sectors last week. Real estate, whether you use ICF, FREL, XLRE, whatever REIT ETF you prefer, they were your best mover to the upside there. And utilities last week were also was your second best mover to the upside. Consumer staples hung in there a little bit. It wasn't the biggest mover week over week, but it was able to at least post a little bit of a gain there, still trading as of before today, trading above the 50-day moving average. It did technically close just a touch below today. And so sector-wise, you got some sort of little bit of weakness in there. But what I wanted to point out was that the dissection between what's doing well and what's doing bad. You do not have this sort of uniform, negativity in the market or uniform positivity. You have everything just sort of sloshing around at the moment. Yeah, it's not really that good. Now looking into today, you got financials back down on the day. They lost about 2%, let's call it, back down towards the 200-day moving average here. Financials hurt by the lower rates, of course, today. The strong move towards lower rates today, I should say. And if you want to break it down into your regionals, they're also pulling back here a little bit as well. Not a lot of life in those regionals right now. You kind of hope they fall off a little bit aggressively here. But for the moment, just a little bit of a down day in your banking stocks, your banking area in general. Move on over to semiconductors, a little bit lower here on the day. Interesting note, the SMH, if you happen to follow this. So 2 weeks ago, about $500 million came out of the SMH, right? Just a negative week. You got the trade headlines and everything. You saw what happened there. It was just negative to the downside there. Last week, $500 million, totally reverses course, comes back in and then some to recover what it had lost. So, okay, that last week was the best week in terms of new money moving into the SMH that it's had all year long. So look at the charts here. All these great moves here, all on lower overall volume, right? This last week, $500 million come in. It's the most it's had all week in any 1 week time period. But yet this is the worst performing group in the S&P 500. It's down just over 8%. Well, since before we started August here. So rather interesting there that people are willing to come back so aggressively into something. Why is that? Well, I don't know. What happened? Did we just all of a sudden solve the trade issue there? It doesn't seem like there's any great reason there. But anyways, just thought I'd point that out. XLE, we already mentioned here, energy moving lower today. Really kind of despite oil moving higher. If you look at the price of oil, it actually gained another 0.5% on the day. The energy stocks as a whole, the oil service stocks, there's a huge dissection there between the price of oil and those oil service companies. They used to move together. Right, so you'd normally see like this sort of nice correlation there. You're seeing that dissection here in the last couple months, and the best way to illustrate that would be to overlay on the price of oil, overlay something like XOP. I mean, I mentioned this one, 4 days last week that it made new lows, so that's a good sort of something to kind of overlay there and take a look at. REITs and utilities continue to be the stronger area. Now today they were lower, so you got about 0.25% lower on the REITs and you got about 0.25% lower on the utilities. However, we would call that relative strength because we would look at the stock market and say, well, that's 1% gain, loss on the S&P. REITs and utilities pulled back just a little bit. Overall, you'd say that that was generally relative strength. They held up today. Why? Because of the rates, right? You got the rates headed back towards highs there. Very helpful for utilities there, which is kind of funny because if we look at the utility sector through this earnings season, come on, what'd I do? If you look at utilities through the earnings season here, they had the lowest number of companies that beat on earnings. That's probably the easiest way I could say it. So they all reported almost all of them have reported their earnings, and a lot of them were saying, we missed on earnings, we missed on earnings, we missed on earnings. Only about 30% of them beat on earnings overall, right? But that's for last quarter. Right? So it's a little misleading information because you go, well, if not a lot of them are beating on earnings, then why do I want to be in this sector? Why is everybody buying this area right now? Think about it. The earnings were from last quarter. There was higher rates at that time, right? People were assuming rates were moving higher. We just recently flipped the switch here and said rates are going lower, right? That's it. So what people are saying now is, look, with rates moving lower, with the uncertainty overall in the general market, with rates and the inversion and everything, maybe I'll go to REITs and I'll go over to utilities because I see the rates moving lower, right? And so because of that, you got a little bit of support there. And so generally, that's basically what happened there. All right, earnings-wise for the S&P 500, we're pretty much done, right? Walmart's going to report on Thursday. We talked about this last week. Walmart's going to report on Thursday. That pretty much wraps things up. We're 92% of the way done officially through earnings season, but Walmart unofficially sort of wraps things up for us there. Earnings, bit of an issue. Right? You look at the earnings per company as they reported in the S&P 500. That's the bottom line number, by the way, right? You brought in so much in revenue, your top line number, you got earnings at the bottom after all your expenses and everything. That overall earnings was lower. Revenue was higher, right? So think about that for a second. If you're a company and you're going, I'm bringing in more revenue, but my earnings are moving the opposite direction. What's going on? Something's wrong. You go from your top line to your bottom line, look for what the reason is. Higher expenses? Do you have trade war issues? Do you have one-time costs like Uber? Just ridiculous. Do you have these one-time costs? How are you able to explain to the public that's investing in your companies or investing in the S&P, how are you able to explain that the S&P has higher revenues overall, but those earnings are starting to sort of dwindle away? A lot of people look at trade there. So in fact, earnings were at the lowest point that they've been since 2014. 2014. So that's not a great quarter. Add to that, you got Goldman Sachs saying, well, we think that this trade issue is going to hurt that fourth quarter. It's not good. So it hurts you a little bit here in the short term. That's pretty much all in terms of rambling about that I wanted to do. In the Dow, you can't see. Let's go back here real quick. There we go. So in the Dow, you're down about 3% here now for the month. Remember last week, we finished just a touch positive. Not in the Dow. The S&P and the NASDAQ finished a touch positive. The Dow's now down about 3% today. Pfizer held us back here. It was a bad day for Pfizer. In fact, quite a waterfall drop there for Pfizer. People you could see they started buying that there towards the end of the day. That's going to be on the Amgen news and the Novartis. I hate these companies. This biotech stuff so hard to even pronounce these days. Anyways, that's the reason for that. Goldman Sachs a little bit lower. It was one of the banks that led the way today in terms of the weakness in the financials. You now know why. Bank of America was the other one, about 2.5%. Bank of America is one of the ones that has a greater exposure in general to the interest rates than some of the other banks. We talked about that last week. Apple down about 0.25%. You'd also say this was relative strength. Not bad, right? The markets kind of got beat up. The NASDAQ got beat up today. Apple didn't get beat up. The Dow got beat up. Apple didn't get beat up. So it's one of the relative strength stocks in your in the Dow and, of course, in the NASDAQ as well. If we go over to the NASDAQ, you've got Amgen shooting higher by about 5%. That's that they won the patent deal. I briefly read it over it. They won the patent lawsuit with Novartis, which Pfizer is kind of playing along with, so that's why Pfizer's been getting hit there as well. Dollar Tree, they report here at the end of the month. Dollar Tree extremely oversold in the short term. Relative strength, though. Hey, it finished 1% higher on the day. That tells you that despite all the general broad selling that we saw today, no real panic selling either, again, just sort of consistent selling. But despite all that broad selling, you got Dollar Tree over here holding up. Definitely an oversold stock, and you like that sort of relative strength there. We already pointed out Melli, so I won't go back to that. This is Mercado Libre, down about 10% on the day. It was your worst performer in the NASDAQ overall. You had 1852-week highs today. Look, it's a lot of the same names. It's REITs and utilities. We don't have to keep going through this, do we? You get the idea of what's going on. REITs and utilities, and a lot of them are the same names. Extra storage space there falls in the industrial category. Public storage space falls into the sort of industrial retail as well. You also had Welltower. I'm sorry, I was thinking healthcare. Welltower hitting new highs. Look, these things have hit new highs now like 5 days in a row. Easy, right? Just easy on these. You got UDR, some of the new ones in here. This is a REIT as well, residential, I believe. Essex Property is residential. That's what I was thinking. Hitting new highs as well. Got a lot of great names in this area here, and then a lot of the other names were utilities based. I'm kind of getting tired of going over them. We get it. REITs, utilities, they're doing really well right now. Have been doing really well. I mean, it's certainly been a great little boost to our portfolios here. However, you got 24 new lows, right? New 52-week lows. It's the same names. It's the retailers that are getting beaten to death here. 3.6% on Capri. This is Michael Kors, if you're paying attention. Nope, PVH, not R. PVH, another retailer. This was on our list a couple days last week, right? Just keeps hitting new lows, really beaten down here today. This is Calvin Klein and a few other names. Ralph Lauren, if you want to stay in that category. Look at just the beat down in this sector. This is almost, I get excited about stocks that sell off, and they have some weakness and they kind of fall, and they have some weakness and they kind of fall aggressively. These are hard to get excited about. This is just a consistent beat down. This is not like temporary overreaction. You know what I mean? Sometimes different sectors, there's a little overreaction. Semiconductors were a great example. Little overreaction in the short term. The bulls come in and go, well, that's a discount, right? It's undervalued. You can't say that about retail here. Some of these names, it's a consistent beat. It's a consistent beat down. It's like they're trying to get up every day and someone's just got their hand on their face, just holding them down. You could look at the retails as a whole if you like. I like the XRT in terms of the ETF I like to use to check that out. The XRT was down about 2% here today, so a little bit weakness there. A little bit of weakness there. Yep. What else do we have here for you? Are we jamming still? Take a second. Yeah, we're looking good. Okay. So if we go back to individual stocks, we'll take a look at a few, and I'll take your questions. You got, not Urban. I'm typing the wrong name. See what happens when you take a couple days off? Uber down 7.5%, almost to the point where everyone has officially or is officially losing. No matter where you bought, if you bought it on the public market, you're almost to that point where no matter where you bought, you've lost money. Boy, that's a tough one. They had the earnings that came out, the big losses and everything, and you have they're doing a hiring freeze for engineers. And you go, well, isn't that a good thing, right? Normally, a stock would respond when a company says, we're gonna cut back in some areas, we're not gonna hire people, we're gonna lay some people off. Usually a stock has a decent response to that. Not with Uber's case, because they've made the point that they need to keep producing to grow. They can't simply sit back with the employees they have, the growth that they already have, the engineering, the software production that they already have, and make this a profitable company. We all know that, right? Because they told us. It wasn't like a secret. So the fact that they're already stopping that means, oh my God, now what's it going to take? How are you going to make a profit if you can't expand like you said you needed to in that category? What's going to go on there? So not a good day for Uber. Now Lyft has been doing a little bit better, but unfortunately that stock was hit by about 5% here as well today. I'll point out World Wrestling Entertainment. I don't talk about this stock often. It's sort of faded out of favor here lately, and for good reason. We found out today that the co-president has been selling shares rather aggressively. You can see it. It's all public record. But that came to light today that's continuing as well. So not good for WWE. All right, if you have any questions, I'll try to do my best to answer them for you. Otherwise, we will wrap it up there. You played earnings plays. This earnings, you got beat up a little bit. It's a tough one. Yeah, I would agree. It's a tough earnings cycle. AMD on the day. Where's my deal here? Talking about AMD pulling back now, but that's had a good run though. I mean, 5% in one day, you don't like to see that. That's essentially trying to mark a top. Can I go back without messing everything up here? Yeah. So when a stock does that, that's essentially telling you that the decisive sellers have made their decision. Technical traders will follow up with that. You still have a nice uptrend there, and I mean, everything's still kind of hanging in there, but you don't like to see that if you're a bull. I guess that's more opinion than anything. I think there was a hiccup. Sorry about that. It looked like it was telling me there was an error there, so it seems like it caught up. Cool. So, hey, my company offers a Roth IRA and a 401k both with a 50% match. No, they don't offer a Roth IRA and a 401k. You may be wanting to say they offer a Roth 401k option. I'm sorry that they make it that complicated. It's Roth 401k and a 401k with a 50% match. There's a limit to that. So I'm sorry that they made that complicated too. There should be some sort of like standard here. But anyways, your question is, the Roth IRA be better from the 401k standpoint? Yeah, you get the money put in the Roth portion, the Roth 401k. That's where you want to go. They have a 50% match. What they're telling you is up to some amount, maybe 3, 4, 5, 6%, they will match half of it. You put in 6, they'll put in 3. They're not saying they're going to match you 50% of your total however you're going to put in there. What they're saying is up to some amount, we'll match half, and then we're going to stop. We're not going to match you anymore. So what I'm trying to say is there's a limit there somewhere. You just got to read the fine print. If you put 12% in, it is highly likely you will get the 6%. So if they match up to 6%, yeah, you could put in 6% and they will give you 3, right? That's the end of it. Right? If you put in 12%, you're not going to get 6%, right? You're going to end up with 3% there. So just know how that's going to play out. And their portion is going to go into the pre-tax amount or the regular 401k. Is it a good option? Absolutely. Yep. You got it. How overbought do you think Roku is in the short term? Yeah, they've done well. They've done well. I can't like say, I mean, it is overbought. I can't say like, oh, it's time to sell it or anything like that. I would agree that based on what's happened here recently, that's an overbought area of or overbought stock. Yep. What is going on with this thing? Can I do this? Yeah. Come on, man. Use your head. Eli Lilly, relative strength, not bad. I mean, it's been beaten down there, so it's a bit of a discounted area. I don't follow this area very closely, so I'm not going to be the best advice for that. You look at the performance here in the last 3 weeks and compare it to the market, you could make an argument there and say, well, that's pretty good. Richard, how often do you change portfolios? Market's down, do you buy stocks that are beaten down? So each one of our funds has its own objective. Think of them as mutual funds. So we are fund managers of each one of our funds. They just do not have expense ratios or any costs or anything involved with them. And we'll keep them on objective. You look at a mutual fund, it has an objective. And sometimes it's discretionary, sometimes it's not, but they have an objective for that fund. So we'll do whatever it takes to stay on objective. with the discretionary ability to pull out volatility, right? That's the focus. If I can slow or compress the daily backs and forths while staying on trend and on our goal, I love that. Yeah. Yep. Ricardo says this is a tweet market. I would agree. I would agree. Yeah. What about Shopify? Give me some clarity there. Help me out. A little leery of Chinese stocks these days, unpredictable. Yeah, let me see, which one was it? Was it Hong Kong? Hong Kong lost 3.6% last week, and just today lost 3%. So I know that probably the stocks you're looking at aren't traded over there, but that gives you a little perspective on how volatile it is over there. I mean, we've got some volatility here, but that's intense. Yeah. How do you measure the speed and volatility of a particular stock? We don't. We actually measure the portfolios as a whole. So individual stocks are certainly helpful if we can decide, something's gotten a little out of control. Typically biotech, I try to stay away from those, but you have to use them. I mean, it's just like the end of the day, you got to use them. I wish I could get away without doing it, but then we wouldn't be able to get the performance, and it would, it'd just be so much harder. But we base it on a portfolio, because at the end of the day, you're going to see your account, or a portion of your account wiggling around some amount. I just want to squeeze it. If I can take the emotion, and that's emotion to me, right? Volatility translates to the end investor as emotion. If I can eliminate some of the emotion whenever possible, it just means that you guys are on for a better ride. It's like a pilot, right? A pilot, if you've ever listened, if you're in an airplane and you listen to the cockpit, sometimes they let you listen up there. If you're listening, sometimes you'll hear the pilot say they're at like flight level 3, 2, whatever. They're at some flight level, and they'll go, can we get a request up to 34, flight level 34 or something, because it's a little bumpy. They're just trying to make it a little smoother for you, right? And then you'll hear the air traffic controller say, yeah, you can't do 3-4, but you can do 3-0, something like that. They're just trying to move around to keep it stable. That's me. I mean, I like the idea of keeping things a little less turbulent, if possible. American Airlines, is that a good discount? American Airlines, United Airlines, they all just sort of got beaten down today, but not only today, for the last little bit there. United Airlines, I think, is holding up better than American. That one's pretty beaten down. American, from this point, I don't know that you get it, but you'd almost like to see that last little waterfall flush out to the downside if you're someone who's mid to short term. If you're long term, I don't know that I can't tell you, but I don't know that it's time just yet. I wouldn't want to guess that. I'd want to see it bounce a little bit, watch the sentiment come around in the overall market, and then participate somewhere along the way. Remember, you don't have to pick the bottom of stocks here if you're a long-term investor. You can afford to miss it by a little bit if you want to watch it bounce first. And then that's one of the more fun things you can do, because if you let the stock bounce, it makes the news. If it fades away, stock fades away. If the stock makes the news and all of a sudden there's a little momentum about what they're doing, like, great example, Kraft Heinz right now, no momentum to the upside, right? You're not going to pick the bottom of that one. You're going to wait for the tide to change. Maybe they'll sell off one of their brands or something. And as that tide starts to change and people get more excited about the future, you might have missed the first 6, 7, 8%, but who cares? You're in it now at a more comfortable level to participate as people want to participate versus trying to buy on the way down. You can buy on the way down. I like that idea, but you got to have just a little, little bigger stones for that one. Adding something there. Dustin, if someone were to open an account with you and buy a certain time of day or certain prices, I've been adding at M1. We invest 2 times a day. No, so you wouldn't be able to actually open an account and say, go, Dustin, buy, do your thing. Technically you could, we just wouldn't do it for you. It gets to be a little too crazy. So we look 2 times a day. Any deposits come in? Yes, let's bundle them up. Let's go ahead and invest for everybody. Later in the day, any new deposits, transfers, or anything come in? Yes? All right, let's put them to work. Or has anybody needed to sell for any reason, change portfolios, whatever it is, 2 times a day, but we do not, we don't entertain the idea of someone saying, wait for it, all right, go. Because that's just not our style. Josh says he's finally learned about how the markets move after a year and a half of 4 corrections. I would say there's maybe a little more to learn, but yeah, it's been interesting the last year and a half. You've had some good chances. Last February was exciting. I gotcha, yeah. End of the year was exciting. You definitely are, I would say you're definitely learning. But this market in general is still rather calm compared to what she can do to you. So heads up, there's more to learn. All right, cool. Yeah, I did. I've nailed it. Got everything done for today. I've shared everything I want to share with you. I hope you enjoyed the show. Just something we do here tomorrow. We'll be back again. Another cool video coming out at 1 o'clock tomorrow. Tried to do some things a little bit differently here today, this week in terms of videos. So I hope you enjoy those. Those are at 1 o'clock on our YouTube channel. Oh, good song coming on in the background. I got to run. I'm going to enjoy that. You guys have a great rest of your day, and we'll talk with you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.